Namaste students, welcome back to your business study. That is, we were studying about the second chapter of financial management. In the last class, children, we had studied about what is the meaning of finance in business, the Gutenman and Douglas definition about the business finance we studied. So what was the definition? Can you tell me? Yeah, the activity that concerned with planning, raising, controlling and administering of the funds used in the business. So this was the definition given by Gutenman and Douglas. We studied about the role and importance of finance in business organization. We had also seen the sources of finance of business organization, that is the short term and the long term. And we also studied about the financial institutions. In financial institutions, we studied about the Industrial Finance Corporation of India, State Finance Corporations, Industrial Development Bank of India, Exim Bank. Now we will move on to the next topic, that is the long-term public deposits. So what do we mean by the term public deposits? We should know the meaning, children. So the deposits that are raised by organization directly from the public are known as public deposits. Rates are offered on the public deposits are higher than of the bank deposit. But here there is a higher risk. Here there is a higher risk in the public deposits. So public deposits cater to both the short term and medium term finance requirements. So now let us know what are the long term deposits. So the long term deposits are the deposits that are the public can buy from the issuing the companies for a period of 6 months to not more than 60 months with the interest rate for the company interest rates for their capital from 8% to 10%. This helps the company's children to raise the funds of their operations and immediately and ultimately profits the buyers as well as with the interest they receive at the maturity. So the public who are willing to invest the money in organizations can look for companies that are offering public deposits and make their deposits with choosing certain period as their maturity children. So the organization provides interest ranges from 8% to 10% to the deposited capital and also pay back the entire capital at the time of maturity. For example, I have invested for 10,000. So by the time of the maturity, I'll be getting back the whole along with the interest which has been levied. I'll be getting whole back the amount along with 10%. With the interest, I'll be getting back the amount. So this way, both the organizations and the public are benefited. Usually, children, the organizations invest the money which is obtained from the deposits in their business to attain greater profit for the establishment and to repay the deposits. And we also see that the maximum amount that can be raised under the public deposit shall not exceed 25% of the paid up capital of the company. Now we will move on to the next topic, that is venture capital. So what do we mean by venture capital? So venture capital is a form of private equity financing that is provided by venture capital firms or funds to startups, early stages and emerging companies that have deemed to have a high growth potential or which have demonstrated high growth, that is it will be in the terms of the number of employees or the annual revenue, the scale of operations, like this. So venture capital firms or funds invest in these early stages company in exchange for equity or ownership stake. Venture capitalists take on the risk of financing risky startups in the hopes that some of the firms they support will become successful. Because startups face a high uncertainty, so venture capital investment have higher rates of failures. The startups are usually based on innovative technology or business model, and they are usually from high technology industries such as the IT, that is the information technology, clean technology, or the biotechnology. So it is the source of fund that is used for new projects. Yes. And also the venture capital companies show active interest in technological aspects of the company in addition to the supply of the capital. Next, we will move on to the next topic, that is the mutual funds. So, when we tell mutual funds, so what are these mutual funds? We should know the what do we mean by a mutual fund. So, a mutual fund, when we tell a mutual fund, is a company that pools money from many investors and invests the money in securities like stocks, bonds, and short term debit. The combined holdings of the mutual funds, it is known as a portfolio. So, investors buy shares in mutual funds. Each share represents an investor's part ownership in the fund and the income it generates. So, there are one of the long-term financial sources in India. So they first appeared in 1964. That is, today India, we have a large number of mutual funds, children. We find this mutual funds both in the private sector as well as in the public sector. So, mutual fund is a fund which is sponsored by the institution to mobilize the savings of the people at large and invest them in the diversified portfolio of securities. Like we are having the Unit Trust of India, the SBI, Magnum Equity Fund, LIC Growth Fund, UTI Market Plan, Prudential ICIC Bank, Balance Fund, HDFC Income Fund, and Bajaj Alliance. So this is at the national level. At the international level, children, we are having the global deposit receipts. That is, we call it as GDR. American deposit receipt, that is the AMD, which plays a very role important role. So now we will move on to the next topic, that is the capital market. So now we have to know what do we mean by capital market. So capital market, children, it refers to the venues that funds are exchanged between the suppliers of capital and those who demand the capital for use. And the primary capital markets are where the new securities are issued and sold. The secondary markets is where previously issued securities are traded between the investors. So this capital market, it has been divided into two. One is we are having the money market and the capital market. So in that we will first move on to what do we mean by money market. So the money market, when we tell, this consists of financial institutions and dealers in money or credit or credit who wish to either borrow or lend. So that we call it as a money market. So the term money market is used in a sense of to mean we mean it is a financial institutions which deals with short term funds in the economy. So when we tell financial, it is money. So money market, what does it do, children? It will arrange the funds for the working capital. Here, the interest rate will be high compared to the other institutions of capital markets. The funds which can be borrowed under money market for a short period, till it might be for one day or for a week or for a month or 3 to 6 months, against the different types of instruments like the trade bills, bank acceptance, and also the bonds, bills, all these comes under the money market. And commercial banks and indigenous bankers, they play a very important role in the money market. Next, we are having what do we mean by capital market. Well, so we should know what do we mean by capital market. So this market, when we tell capital market, it refers to the various venues where funds are exchanged between the suppliers of capital and those who demand the capital for use. So that we call it as a capital market. Capital market, it refers to the institutional refers to the institutional arrangements for facilitating the borrowing and lending of long term funds for a fixed deposit, lending terms for long term funds for fixed, not a deposit, children, sorry, for the fixed capital. So the rate of interest is low when compared to the money market. So here the financial institutions, finance corporations, investment trust, mutual funds, all are the lending financial institutions in the capital market. So now we will move on to the next topic, that is the stock exchange. Can you see this? This is the National Stock Exchange what we are having. So first we will move. What do we mean by stock? What do we mean by stock exchange? So if it is one of the constituents of capital market, it is a specialized marketplace that facilitates the exchange of the securities that are already in existence. We call that as a stock exchange or a stock market. So in 1773, the first stock exchange was originated in London, and in India it was started in 1875 in Bombay. And at present we are having, children, 24 stock exchanges in our country. So out of that we are at 13, or out of 24 we are having 13 are public limited companies, and 6 are limited companies by guarantees, and other are voluntarily profit making organizations. Only 8 stock exchanges are permanent, and others have to renew their license. They had to renew their license every year. See, when we tell the stock exchange, what we are having, 21, 24 we are having Bombay Stock Exchange, National Stock Exchange, Ahmedabad Stock Exchange, Bangalore, Bhubaneswar, Kolkata, Cochin, Coimbatore, Delhi, Guwahati, Hyderabad, Jaipur, Ludhiana, Madhya Pradesh, Madras, Magad, Mangalore, Meerut, OTC, Pune, Saurashtra, Uttar Pradesh, Vadodara. All these are the 21 regional stock exchanges what we are having it in India. And also the stock exchanges, when we tell, these stock exchanges regulate and control the business in buying selling, and also they deal in the securities. These are regulated by the government, children. They do not engage only in the purchase and sale of securities, but provide a place where members can carry out their business on their own account under the codes and also the rules and regulations. Next, we are having the National Stock Exchange. So, when we move on to the National Stock Exchange, children, the National Stock Exchange was set up for the purpose of providing a nationwide stock trading facilities to the investors, so as to bring the Indian financial market in line with international financial markets. So this started its operation. This started its operation in 1993. Now it uses the electronic trading system and computerized settlements what we are having now, and electronic computerized settlements aimed at extending the facilities of electronic trading to every corner of the country. Only the agents can operate the business in the stock exchange. Shareholders, children, they have to open a separate account to buy the sell share, to buy and sell the shares. We call this as a demat account. So, what do we mean by demat account? Is a 1 marks question. It is so where the shareholders had to open a separate account to buy the and sell the shares. We call that as a demat account. So demat account, it provides security of the shares. Nowadays buying and selling shares is not possible without a demat account. See, we can see here, children. In order to raise the capital, this was started by the Britishers, who encouraged the Indian traders to invest in the financial stock of East India Company and earn huge profit. Then we are having the history of stock exchange. So the stock exchange was established by East India Company during the 18th century. In India, it was established in 1850 with 22 stockbrokers opposite to the Town Hall, Bombay, and the stock exchange is now the oldest stock exchange of Asia, the Bombay. We can see the Bombay Stock Exchange was established, is the oldest stock exchange in Asia. It was established in 1875 as the Native Share and Stockbroker Association. Over the past 135 years, BSE was facilitated the growth of Indian corporate sector by providing it with the efficient capital raising platform. The equity and market capitalization of the companies listed on the BSE was 1.63 trillion US dollars as of December 2010. So the BSE has the largest number of listed companies in the world. And we also see the union budget of 2019-20, where we are having the union budget, where Nirmala Sitharaman was a finance minister. So I propose to initiate the steps to create the electronic fundraising platform, a social stock exchange under the and regu- uh, regularity ambit of SEBI for listing the social enterprises and voluntarily organizations working for social welfare, so they can raise the capital as equity, debit, or as unit like a mutual fund. So what are the objectives where we tell? Establishing nationwide trading facilities, ensuring equal access to investors, providing fair, efficient, and transparent activities, markets using the electronic trading system, enabling the shorter settlement cycles and book entry settlements, meeting the international benchmarks and standards. We see that the Bombay Stock Exchange profile address, where we are having the address, the Pirozi Jijiboy Towers, Dalal Street, Mumbai. One telephone number is also there. We are having the website, the trading hours, Monday to Friday 9:55 a.m. to 3:30 p.m. IST, and holidays, where when and all is the government holidays, where they tell, and also the securities and also the trading system is there. So like this it will be there. So with this, children, we finish up with the chapter financial management. Thank you, children.